right, so this is the agenda for tonight. So we're going to kick it off with our story. Then Yuren's going to dig deeper into Curvo's portfolios. And then I'll come back and close out with a bit more about the app. And then the floor is yours. So there'll be a live Q&A. So let's get into it. So our story. So who are we? Well, I'm that guy there. I'm Thomas Ketchell. And then on the right is Yuren Bronsimer. So he is my co-founder, but we're also friends from secondary school where we went to school in Brussels, Belgium. And so we're entrepreneurs. And around 8 years ago, we started our first company, which was Sutori, which is one of the leading edtech platforms around the world. And we have close to 2 million users on the platform. And while building that company, we started to put money to the side. And then we realized that pensions pretty much screwed. And why do we say that? It's because our generation, which are millennials, we actually need to really be prepared better financially, because 25% of the Belgian population is actually over the age of 67 today. But by 2060, it's actually going to grow to 40%. So who is actually going to fill that gap? And so Yuren and I had been saving for a long time. And so it was all there sitting on a savings account. But what we quickly realized is that the interest rates were so rubbish and we were actually losing money due to inflation. So there had to be a better way of taking care of our retirement. And the more we looked into the whole retirement angle, especially as entrepreneurs, we actually were really confused by our retirement plans. And we looked into the numbers, and the legal pension is very low and it's very uncertain. And so the more we got into it, the more we were looking for resources. We asked our bank and we just couldn't find what we were looking for, which was a way to retire on our own terms. And so we dug into the world of investing, and we soon realized how difficult it is to actually get started. Instead, all we found was a lot of jargon, complicated financial solutions, and really clunky apps. And so this really got us into more of an idea that we had to take matters into our own hands. And we approached it like many people do by saying, well, we'll just pick some stocks, and then when they go up, we'll have enough money to retire with. However, this did not end well. So this is a personal story for me. I bought the stock of Fitbits. I don't know if you remember them. I think they're still around, but they were these little trackers which would count the number of steps you were doing. And so I had this genius idea that loads of people would want to buy Fitbits for Christmas presents. And so I bought the stock November 4th in 2016. And then 2 months later, in January in 2017, it dropped by 40%. And so this was quite the wake-up call, which showed me that actually I had no real inside knowledge. And I thought I was being smart, but I was actually being quite silly because I just completely misunderstood how it was actually going to work. And so Fitbit is only one of our examples. We also invested in Dropbox. BlackBerry was another failure. And so the more we saw this kind of active stock picking, the more we realized there had to be a better way. And so that's where we came to the conclusion that good investing is actually boring. And data shows that passive beats out active investing. And so this is when we really got into the passive investing mode. And so what we found is that rather than picking individual stocks such as Tesla or Apple, index funds are actually a way to buy the whole market across all sectors and regions in the world. And this is more profitable. And so you invest in index funds, and this is where thousands of companies are brought together in one go. So essentially, what you do is that you own a small portion of thousands of companies throughout the world. This is way better than just owning Fitbit and then seeing it drop by 40% in 2 months. And so we started the DIY route. So we were doing it ourselves to start investing. But what we quickly realized is that it was really challenging to find the broker, to figure out the taxes, and also how to build a portfolio. So this was where we were really looking at the market and seeing like, there's got to be a better way. But we persevered and we started investing in index funds, and the returns were super positive. So people started asking us if we can invest for them. We asked ourselves, was this a problem we could actually solve? And these were the problems when we really looked back on it, is that it was difficult to get started for us. We found that millennials like us were not well served in that traditional banks, they aim always for higher net worth individuals. They don't build a product for us. And there was so much admin. So we had to understand the legal, the tax, and the management of assets. And this is a really particularly tough one, is that staying the course and being sure of the decisions you make is a real challenge. So you got to adopt good financial habits. And this is why we built Curvo, to solve those problems. And so we'll look in the app a bit later, but now I'll pass this over to Joran, who's going to talk about the portfolios.
Hi, I'm Joran, and now we're going to look into what is actually in the Curvo portfolios. So you know what an index is? And we work with two indexes for stocks. The first one is FTSE Developed All Cap Choice Index. That's an index that consists of 4,700 companies from 26 countries that are deemed developed. So think about US, Canada, Australia, EU countries, and so on. And in terms of sustainability, it excludes companies that are involved in non-renewable energies, such as oil and gas, vice products, or weapons. The second index is its counterpart for emerging countries. So those are countries like China, Taiwan, Brazil, and so forth. So together, those indexes make up over 7,400 companies, 7,500 companies, sorry, across 40 countries. So it's really hugely diversified in the Curvo portfolio. And to kind of counteract the fluctuations of stocks, we use bonds. So the first index is a corporate bond index. So those are bonds issued by companies. Each of these companies meets the United Nations Global Compact principles, which is a set of principles around sustainable and socially responsible business practices, and also includes companies that are involved in vice products and weapons. Secondly, we have an index of European government bonds. So those are 9 Eurozone countries. And then lastly, also a government bond index, but those are inflation linked. So those are kind of special bonds in the sense that they maintain the value when inflation rises. So it's kind of a protection against rising inflation. So those are the indexes. Then we picked 2 providers for the funds that implement each of these indexes. So on one hand, we have Vanguard, which is whose founder, Jack Bogle, is actually the inventor of the index fund. And then on the other hand, we have funds from iShares by BlackRock, which is one of the world's leading asset managers. So using each of these indexes and funds, we've composed 5 different portfolios, each targeted for different risk profiles. So going from protective, which is for the person who is very risk averse, or who has a short time investment horizon, going to growth. So growth is for a person who doesn't mind little fluctuation in the value of his portfolio, and who has a very long horizon for his investment, so 12 years or more. So me and myself, so I started investing through a broker, so by managing my own investments, but now I put them all on autopilot through Curvo. And so one of the questions I had is, how much can I safely save every month? Since the investments are automated, so every month there's a direct debit that automatically takes a certain amount from my account. And how could I determine what the best amount was for me that I could save safely with Curvo? So I did a kind of an easy calculation. So first I looked at how much I earn. So roughly 2,900 euros net a month. Then I looked at all the expenses that I have on average in any given month. So I looked at rent, food, holidays, but also sports memberships, groceries, restaurants, going out, and so on. So I really tried to be as comprehensive as possible on this. And then I came to a conclusion that I spent about 2,000 euros per month. Then I looked at how much money do I have on a savings account. So it's important to have a buffer on a savings account, because you don't want to be in a situation where you have to sell some of your investments to, for instance, cover an unexpected cost that you have, like an expensive car repair, something like that. And so I have 10 months worth of savings on my savings account, which for my situation I thought was plenty enough. So that leaves me with 900 euros that I can basically save every month for the long term to build towards my retirement. And so I decided I can safely save from those 900 euros, I can safely save 500 euros per month and invest that automatically through Curvo. The other 400 I can use, for instance, as a kind of a safety margin. For instance, if I have a high tax bill than expected, so my income is actually lower than 2,900, or I misestimated my expenses. I also do a bit of investing in crypto on the side. So that 400 is kind of for all this other stuff. Then when I use the Curvo app, I managed to see what the best Curvo portfolio was for me. It turns out that Curvo Growth is actually the best for me, mostly for two reasons. First of all, I'm saving for 30 plus years, so that's a very long investment horizon. I don't want to use this money before I retire. And secondly, I'm okay with additional risk to get a higher return. So then I know how much I'm saving every month. So how much can I hope to retire with, when I turn, in this case, 62 after 30 years? So first, we're going to see that I'm contributing 500 euros every month, which means that that amounts to 180,000 over the course of 30 years. In the first scenario, we're going to put it all in the savings account. So we assume that it yields a 1% interest per year. So by the end of 30 years, we get 240,000 euros. Then we laid out three scenarios for the Curvo growth portfolio. So we did those scenarios with backtest, which is a tool that we developed, which allows you to backtest any portfolio of index funds, and then also to make scenarios for the future based on the historical performance. And so we came up with three scenarios. One is great, which is in the unlikely event that the stock markets are doing extremely well over the next 30 years. Average, which is kind of the expected outcome. And then bad, which is the unlikely event that the stock markets are doing very poorly over the next 30 years. And so we can see that even in the bad scenario, we are still left more than with the savings account. So 70,000 euros more. In the average scenario, we have times 3 almost. And then in the great scenario, we have more than or almost times 10. But these big numbers, they don't really mean much. And it's best to convert them to monthly income to kind of see, what is the effect on my monthly disposable income that I will have after retirement. So here we assume that I will retire at 62. So I'm 32 now. In 30 years, I'll be 62. So we looked at what is the life expectancy. Well, in Belgium, as of now, for Belgian males, it's 78.5. So that leaves us 6.5 years to use our saved up money. And so in the case of savings accounts, that leaves us with 1,200 euros a month. Whereas for the Curvo growth portfolio, varies between 1,500 and 11,600 for the great scenario. So that was kind of a look into what is in the Curvo portfolios. And now we're going back to Thomas, who's going to explain how the app works.
Right. Thanks, Joran. So let me move myself over to the right here. So download the Curvo app. So we're available on iOS and Android. And so you can sign up with It's Me directly, who we have a partnership with them. And then we'll actually ask you, tell us what you need. So we'll ask you a few questions. And then from that, we'll build a portfolio that actually suits you. So you will get a globally diversified portfolio of index funds. You can then send money to be invested. So you can make a deposit, a lump sum to start your investment journey. This is from 50 euros. And you can also put your investments directly on autopilot. So, we really want to encourage good saving habits. So you can really just set it up, and then it's running itself and sending money every month to be invested for your nest egg. And so you can sit back and watch your savings grow. So through Curvo's app, you follow the evolution of your portfolio. You have the ability of depositing more funds, and you can withdraw funds at any time through the app. And there is also a live chat to chat with one of us if you have any questions or need help. So concretely, through Curvo, what you get is a globally diversified portfolio of index funds that suit you. You get the buying and selling done for you. There's no extra fees when making transactions. There's a rebalancing, so your portfolio is balanced and aligned to you. And there's no withdrawal fee, plus you can withdraw at any time. You also get your taxes sorted, so the TOB, the renders tax. We know that no one actually enjoys figuring this stuff out. And really the big feature that you're getting, the big benefit is really peace of mind. So your success is our success too. So Curvo costs 1% per year on your total investments. And safety is a big part of Curvo's structure. So Curvo is regulated by the financial authorities. We partnered with NNEK, a Dutch investment firm who manage the actual part of the investments. It's authorized by the Belgian financial regulator, the FSMA, and it's obviously licensed by the Dutch regulator, the AFM. Your assets are safe from bankruptcy, so neither Curvo nor NNEK hold any of your investments. So instead, they're kept in your name by a custodian, which is a separate and independent entity which has no commercial activity. And no euro can actually go missing because Curvo's app works with fractional shares, meaning that all your money is invested. So there's never any cash left on some random account. And of course, you are protected by the European Investor Protection Scheme. So this ensures that your assets are protected for up to 20,000 euros. This is really a last resort against fraud or embezzlement. And like I've said before, you withdraw your money whenever you like. So there's no long-term contracts, no penalties, no fees to leave. You're in total control. And we're here for you. So obviously I've already spoken about Joran and myself. And then just next to me right here is Benjamin Corvillain. So he's a former private banker at Berenberg and Credit Suisse. And the three of us are really here to help you. So if you do sign up and download the app, you can chat to us at any time. And we're here really to support you and your goals. So all I can recommend is that you head on over to the website at curvo.eu. All the details are there. We go in depth on, if you want to learn more about my Fitbit story, we go in depth on that, but also we go really in depth in terms of the safety and product and also the pricing. Hey everyone. So that was a great little introduction to Curvo. So I see Joran's also here. We've had a bunch of questions come in. So Joran, I guess you want to start off with the first question from Ayonut?
Sure, yeah. So you asked a question why we don't use VWC, but we use the two funds separate. Well, first of all, we don't work with ETFs. So our partner NNEK, the way that custodian is set up is as a Giro system, which is kind of a very Dutch system. But basically, in that system, it's more cost effective to use to invest in index funds rather than ETFs, because then you can go directly to the fund provider and buy directly from them rather than going through purchase at the stock market where there's a fee. And so for the funds that we use, we actually have lower expense ratios than the one you mentioned, so 0.24 and 0.30. Actually, our case, there are 0.20 and 0.25. And so the reason we did it separately is it's kind of have more flexibility in the ratio. In VWC, the ratio between emerging and developed is fixed. And so, because for us, simplicity is not really an issue because all the shares are bought in bulk for all customers. So this is why we decided to split them.
Great. Thanks, Jaren. So we have a couple more questions that have come in, so that's great. So thank you all for asking your questions, and don't hesitate to keep asking them. So this question is, what kind of technologies do you use?
Yeah, let me just change camera. Okay, this is easier. Technologies, yeah. So in the backend, we use Ruby on Rails as our main framework. So the Ruby language on the Rails framework, and then front end. So the mobile app is built on React Native. So we don't have a web apps. It's purely like a native mobile app available on iOS and Android.
Yeah, and Jaren, do you want to maybe talk about the integration with It's Me and how that works for Belgians?
Yeah, sure. So we use It's Me indeed for the KYC, the know your customer. So traditional, if you would open accounts with like a broker or something like that, or a traditional, as a manager, you need to, send a copy of your passport or of your ID. And someone does like a manual check. It's kind of a slow process. And with It's Me, we don't have to do that, and neither do you. So it's just a lot easier. It's just like you used to declare your taxes with It's Me, or use the COVID Safe app in Belgium with It's Me. So it's really like in 5 seconds, you log in, and then we get the information. So we can really smooth that process a lot this way.
That's great. Yeah, I got a question from Mark who asked for both of us really, Jaren, is how many people have signed up since we started Curvo, since we launched about 2 weeks ago, and yeah, he wanted to know the numbers. So do you want to share?
Sure. So we actually have the numbers. Maybe I'll quickly screen share.
Yeah, so we publish all of our numbers relatively live, so we're fully transparent in that context. We really try to really showcase as much transparency as we can for a fintech company, and we really want to share those numbers. So yeah, Jaren, do you want to show the webpage?
Yeah. So this is the live number of as of today. So 43 customers, a total of 134,000 euros in that people have saved up with us.
Yeah, I couldn't see it your end, so I'm not sure
Sorry.
if it's just me. But we'll put the link in the chat, so then you guys can all go and view it yourselves. So then our next question is from someone that's been following us for the last couple of years, who's become a very good fan of Curvo. So it's a. So the question is, I'm a Belgian with a Belgian bank account, living and paying tax in the Netherlands. Can I use Curvo?
Unfortunately, not yet. So at the moment, because you're a tax resident in the Netherlands, that is not possible. We know that It's Me has launched in Holland. So on that front, we could do it. The issue is the taxes, dealing with taxes. So right now our system is set up to deal with Belgian taxes, and Dutch taxes, as you can imagine, is very different. And so this kind of same issue with all the countries in Europe. So we have plans of going abroad outside of Belgium naturally, because we think the problem that we're solving for our generation is a European problem, not just a Belgian problem. But so we've just launched 2 weeks ago, so we have a lot of work to do still in Belgium before we can move abroad. So sorry.
Yeah, sorry, it's not yet, but yeah, thanks to everyone who's signed up, who's not Belgian, or not living in Belgium and paying tax there, because yeah, that list keeps growing. Is there any other questions? Don't hesitate to post them into the questions tab, and then we'll answer them as they come in. And yeah, again, it's roughly 43 customers that we've welcomed on board in the last 2 weeks, so it's been quite busy. We have some good improvements that we're making to the app, which are just going to improve all of the onboarding and getting more and more people to save for their retirement. So we have one more. It's a comment from again from Oyunut, which is about loving the portfolio backtest tool. It's the best tool for European investors. So, Jurgen, that's kudos to you. And yeah, have do you plan any kind of improvements to backtest as well, Jurgen? Or
Yeah, I mean the list is growing. Of I get a couple of emails pretty much daily about mostly about people wanting to add the funds. So that's really good. So that's something I'm really keep on working. Ambition is to cover 100% of the ETFs in Europe, at least the passive ETFs. And then, on the roadmap, some stuff that we want to work on is the supporting multiple currencies. So right now everything is in euro, but then quickly I got some Polish users and British users or Hungarian users saying that they would like to see it in their currency. So that's also something that's on the roadmap. So definitely still working on it and improving it every day, every week.
No, that's great. And yeah, we're really happy that everyone's joined, and it's great to see such a European crowd today as well. So thank you all for joining. I think we're gonna wrap it up unless there are some more questions within the next 30 seconds. So we're really running out of time. Maybe I'd ask one question for you, Aaron, is yeah, how are we, Curvo, going to get more users and people to know about passive investing?
Yeah, so that's a big problem, big challenge. I think biggest challenge we have. I think we write a lot of content, so we try to educate a lot of people. That's one thing that we have been doing, and we're continuing to do. Obviously, with backtests, we hope to get more and more people, by creating tools such as backtests or other tools that kind of, solve a specific need that people have. We hope to make it easier for people to start investing or see the value of investing at least. But yeah, maybe I'm sure you have other thoughts as well about that, Thomas.
Yeah, I mean it's obviously going to be a big challenge, and I think if we can manage to share more of the message and really explain it in a very clear way to our generation and our peers, then I really believe that we're solving a real pain with Curvo. And so yeah, we're going to rely a lot on our first customers and our first batch.
Oh, I see Thomas is connected. He's probably gonna join back on. But you asked any plans for partnerships with banks or other apps? Yeah, banks is a tough one, because a lot of banks actually sell active funds, and so there's kind of a conflict of interest because we know that they earn quite big profit margins on active funds. And banks, they also do 10,000 things. They sell insurances, they do loans, they do investments, they do checking accounts, savings accounts. So I think it's going to be tough to partner with a bank, we think. However, other apps definitely, because we see fintech, we're not the only ones. There's lots of other apps that are solving various problems people have in a super cool way. Like for daily banking, you see a lot of neobanks, but also apps like Cake, for instance, in Belgium. So partnership with them, if it makes sense, then why not?
Yeah, definitely. No, I think that's a good point. And obviously, we're going to rely a lot on the community and people continuing to share backtest and Curvo and some of our content and YouTube videos. So yeah, I think we're going to wrap it up right now. So thank you all for joining tonight. It was really entertaining for us to do this and share our story. It's been a busy 2 weeks, but now we're really excited that it's all the new things that we're working on and going to offer you. So yeah, appreciate it a lot. Thanks a lot for joining, and have a good evening, everyone.
Thanks, everyone.
All right. Bye-bye.
Bye-bye.